What's up everybody? Welcome to the Stocks channel. My name is Cory and today we're going to look at weekly charts of all of the indices, and this is going to be a very critical week ahead to let us know whether or not we're going back into the bear market, or are we going to start forming another higher low and start marching back higher. So first up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, just a quick announcement is I am currently running a 50% off promotion code for bank trade alerts to get 50% off your first month. All you need to do at checkout is apply the coupon code Labor Day, all one word, no spaces, and I will have the details in the description below. I also want to announce that Bank S Plus is a brand new bank system that now will also trade the SQQs, which means you can now receive buy and sell alerts to short the market using the SQQs. The Bank S Plus system has 6 algorithms, which also includes trading the buy and hold position. So you can now receive buy and sell alerts for the TQQs and the SQQs using the Bank S Plus system. If you choose the bank system that only has 3 algorithms for the TQQs, you can also still receive the 50% off discount. So all of the details will be just below, so go ahead and go check that out. Alright, so on this weekly chart of SPX, we can see that it is going to be a very critical week because we are currently starting to see another waterfall wave of selling like we started to see in the month of April, which means on the weekly chart we are in a falling knife scenario. Now also take note that we do have a weekly gap that is still open, which is on SPX levels of 4200, and typically on weekly charts you don't see a lot of gaps, so there could be a very real possibility that at some point the SPX is going to want to retrace up there and fill that gap, but we have no guarantee in what time frame. So if you've been following my daily analysis, you know we are watching very closely that level at SPY 390, and that is going to be the same level on SPX of around 3900. As you can tell, we did form a higher low and a higher high on the weekly chart, so we do have a little bit of difference than we had back in March, where we were just making lower highs and lower lows. On the weekly chart, we never had a closing higher low and then went on to make another closing higher high, but we did see that in July. So for that reason, there is the possibility if this level at SPX 3900 holds up and we find support at that level, we could still be in a trend of higher lows and higher highs. So quite simply said, you have a very well-defined risk level whether you want to go long on the market or short on the market above or below SPX 3900. While we are above that level, it is very likely you could take long trades and still make very decent profits, but when we are below that level, it is going to be a lot more of a capitulation event, which means SPX could come all the way back down to retest the lows, and the last closing low on the weekly chart was right around 36.75. So do keep in mind that is going to be a very critical test, and we are already testing that level now as of the close on Friday. So watch that level at 3900 very closely, and if you are trying to be bullish, you need to get extremely risk off if that level breaks down, because that could mean that we are going through a much more volatile bear market, which means we could be going for another lower low, which is more than likely going to be down there at 3500 if we break the previous low at 36.75. Now I know a lot of you are aware of the backtest that says the bottom is in, and whether or not the bottom is in is not really what we need to be concerned about. What we need to be concerned about is that we are in this falling knife scenario in the short term, and since we follow price action, we instantly need to get more risk off if this falling knife loses this critical risk level at 3900. Now one thing to note, the bear market of 2008 did bottom in 2009, and we still had a max drawdown, which theoretically would take us down to 38.41 in today's market, and then we could still see a return of some type of uptrend. But I do not want you just blindly believing in that backtest at this point in time, because the price action does look bearish. And if we lose that risk level at 3900, we don't just want to assume that the previous drawdown in 2009 is going to hold up. So while we do have other support levels below 3900, because we're in the falling knife scenario, we need to be respectful of the fact that price action looks very bearish, especially if we lose that support zone. Now to get more bullish, all we need to do is hold this support level right around 3900 and start to see some type of positive bounce and try to get back over that level right around 40.60. So just take it day by day, and on weekly analysis, keep in mind these candles do not close until the end of the day on Friday. So it's going to be a very volatile ride because we are likely going to see a lot of whipsaws in both directions. So just focus on that very critical risk level on 3900. On the bear bull survey, we are back to extreme bearish sentiment with over 50% of the people that are bearish. and you could say rightfully so, but since we follow price action, we are waiting until SPX 3900 breaks down to get a lot more bearish on this market. For example, if everybody is expecting lower prices and a brand new lower low in the SPX, it could be possible that the market goes the opposite direction to cause the max pain to the majority, and the majority are still currently very bearish. That doesn't guarantee we need to see a reversal, but it is something to be very aware of. And when everybody stacks up to one side of the trade, don't be surprised if the market does the opposite. On the Nasdaq 100 NDX weekly chart, we could see the NDX is currently looking extremely risk off, and we are currently sitting right there at that breakout level, which is right around 12,100. If we start breaking below 12,100, that is going to be synonymous with SPX 3900, which means you need to be instantly risk off for a retest of the low, and the previous closing low on the weekly chart was right around 11,260. So as you can tell, it's going to be an extremely critical week because we're sitting at extremely critical risk levels, which means the bears are going to start taking back over control of the market if these levels break down. Keep in mind the bulls are working with a higher low, higher high situation. So if they do step in at this level and we start to see a positive bounce, that is going to be a very bullish indication, but you will always want to be aware of that risk level because any moment that breaks down, we could see that waterfall wave of selling to the next previous low. And if we break down to a brand new low, the next price target to the downside will be at 10,589. So be aware of that risk level and watch it very closely, and then you can follow price action to know which side of the trade you should be on, whether or not we are above or below that risk level. On the Dow Jones weekly chart, we are seeing the same exact story, and we are currently below the risk level in the Dow Jones, which was right around 31,500. So it does appear that the Dow Jones is leading the way lower, already slicing through that risk level. Now it could be a false breakdown, so if we immediately get back over that level, you can instantly get more bullish, but you also need to get instantly more bearish if we break down below it. The Dow Jones is the most interesting because this is the index that has that huge weekly gap that never filled all the way down there at 28,495. And as I always tell you, gaps usually do get filled, especially on the weekly chart. So this could be the best bear scenario for the bears, that this gap is likely going to get filled before this bear market is over, which means we still do have a lot more downside and a fresh low coming before we put in the bottom. Now you can't just assume that gap has to get filled at this point in time because it could still get filled at a later date and still fill the gap. So do just keep in mind, as soon as we get back over 31,500, it is a lot less likely that the bears are taking over. But while we are below this level, it is more likely that the bears are in full control. Below 31,500, look for a retest of the low right around 29,800. On the Russell 2000 weekly chart, you can see that we did lose that critical risk level at 1889. So the next critical risk level is going to be all the way down here right around 1767. We're not quite there yet, so the Russell 2000 still has more downside before it's at the critical risk level. But as you can tell, a lot of the other indices are currently sitting right at their critical risk levels. So whether or not the Russell 2000 continues lower to test this support is to be determined. But you are getting instantly more bearish or more risk off below 1767, and you're getting a lot more bullish above 1889. The previous low in the Russell was down here at 1665, so if we break that, it's very likely we're going to 1578. On the VIX weekly chart, we see the VIX continuing to close right around that level at 25, and the VIX is now 2 weeks back over 24, which continues to remind you that we are back into a volatile market until the VIX crushes down below 24. Now the VIX does fill its gaps, and there is a gap down here right around 21. So you can get more bullish as the VIX crushes below 24, because below 24 it will likely start trending down to crush down towards that gap fill. Now while it's above 24, just be aware it's going to be a volatile risk off market, and even if you're shorting the market, it's still very volatile, which means whipsaws do work in both directions, so just be aware of that. On the Bitcoin weekly chart, you can see Bitcoin is back down to the critical risk level of 19,000, and below 19,000 the floodgates could open that could allow Bitcoin to get all the way down to 12,000. There is very likely going to be a support on the way there right around 17,000, so be aware of that as well. And we are not getting bullish until we can break out above this previous high right around 24,000. Bitcoin is clearly in a bear market and has never broken back over the resistance trend line. And as you can tell in the weekly chart, it is still forming lower highs and lower lows. So you're not getting more bullish unless you're accumulating for the longer term until we break above that resistance at 24 to 25,000. On the ARKK weekly chart, nothing has changed, and you can see we're still well below our risk level, which is up there right around 52 and 48, and we have not seen any weekly closes above that level ever since we got the strong rejection from the trend line. So it's very simple in ARKK. You're just staying risk off until we can see a weekly close back over 48, because it's a very strong bear market that could still be trying to trend down towards the low 30s. So jumping back over to the S&P 500, this is going to be a very critical week, and just watch that very critical risk level very closely at 3,900, and then you'll know exactly which direction you should be trading in. Or if you just want to sit in cash and wait for more clarity, that is also completely fine. With this very volatile market, there is going to be plenty of opportunities to do very profitable trades, and now is the best time to try out bank trade alerts. So don't forget about that 50% off coupon code Labor Day, which you will need to apply at checkout to receive the discount. You can find out all of the information about Bank by clicking on the link in the description of this video, and you can also find out all of the details on how to claim your 50% off coupon code for your first month. I also have the Stocks Channel Discord, where I give you all of my intraday updates and analysis to help you become a better price action trader. So if you want to come trade with the Stocks Channel Discord community, you can find out how to join that Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're all enjoying your long Labor Day weekends, and as always, I will see you in the next episode.